Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live. How is everybody doing today? All right, well, today is Monday, August 26, 2019, first day of the new trading week, and we are now in the final hour of the market. And as I mention every day, I'm primarily an end of the day trader. The way I look at prices is I look at the closing prices as the most valid prices of the day, and therefore the most valid prices to make my buying and selling decisions from. So thank you everybody for coming today. I appreciate it. I appreciate your investing your time in watching this live stream, and I really hope that it's helping with your trading. We are having an up day today after Friday's big plunge. We're up 219 points on the Dow. We're up 84 on the NASDAQ, and we are up 24 on the S&P. So it's good to have some green today after Friday. But we're going to need to be careful because that was a big day on Friday. So we're going to have to be really careful going forward. Let me just make sure everybody can hear me okay. If you can, maybe just say hi or something in the chat, just so I make sure we're all connected. All right. So listen, the plan for today, as always, the format for today is, first of all, we're going to go ahead and run the U.S. legal disclaimer. Then we're going to come back. We're going to take a look at my current positions. We're going to talk about when I bought them, why I bought them, and more importantly, how I'm going to manage them going forward. Then we are going to do just a few minutes on trader psychology. As you guys know, trader psychology, in my opinion, is the most important skill that you're going to learn in trading. The fundamentals of the fundamentals of technicals, but learning the technical setups, learning the structures of the charts that hopefully give you an edge is important, but it's really not the tough part of trading. The tough part of trading is whether or not you can keep your ego out of it, keep your impulses out of your trading, follow your plan, do what you're supposed to do. That is what is going to make you either a long-term profitable trader or, frankly, a losing trader. And everybody goes through it, and the traders that have been in this business have found a way to overcome their weaknesses. And there's a lot of different approaches. Me personally, I think one of the best things that you can do is, if you're having troubles with impulsivity or not following your plan, is get your boyfriend or your girlfriend or your husband or your wife or your friend involved with you. Let them know what you're doing. Let them know what your trading plan is, so that you have kind of an accountability buddy looking over your shoulder to make sure you're doing what you're supposed to do. I know people have done this, and it's made a huge difference in their trading results. So it's something you might want to consider. Just let somebody know what you're doing, have someone be accountable, for you to be accountable to someone. It's interesting. You hear many stories about people on Wall Street that are professional traders that work for hedge funds or prop firms or large financial institution, and they've been traders for years and years and years, maybe 10 years, 15 years, 20 years, and they've always done well. But what happens is a lot of them decide they're going to go off on their own, trade on their own, so they don't have to divvy anything up with their firms. And they go out on their own. They feel like, hey, I've been trading for a long time. I certainly know what I'm doing. But all of a sudden they start losing money. And, the stories are, the reason they lose money is because when they were with the hedge fund or they were with the prop firm, they had somebody looking over their shoulder. They had an accountability buddy, right? There was a risk management person above them that did not let them get into trouble or too much trouble. But when you go off on your own, boy, you're as free as a bird. You can do anything you want. You don't have anyone looking over your shoulder. And that is why a lot of them lose money, because they don't have that risk manager. So, Ideally, it's best to be your own risk manager, but for some reason, if you can't do it, get somebody else involved. So that's my best advice, and I've seen people that have done this make huge differences. As a matter of fact, I hired a trading risk manager for me for years. It made a huge difference. It made a huge difference. I just couldn't do anything. I tried to explain to him, well, yeah, but this and this and blah, blah, blah. And he'd say, yeah, that's good, but that wasn't the plan. And I was always glad that he said that. So anyway, and then after we go through my current positions and do a little bit on psychology, we're going to go through my watch list. We're going to look through one by one each stop. We're going to take a look at support and resistance levels, other technical indicators like RSI, MACD, ATR channels, and we're going to see whether or not there's any valid trades for us or for me to take at the end of the day. And the most valid trades for me is when you get a combination of indicators lining up at the same time. I look at indicators as groups of buyers or sellers. So if I see 2 or 3 or 4 indicators lining up at the same time, the way I look at it is that's 2, 3, or 4 different groups of buyers all coming in at the same time. And if you want something to go up, you want to be in the company of other groups of buyers, right? Not with sellers. Just makes sense. And then if we find something, I'll go ahead and take it at the end of the day. If not, then we won't take anything, and we should be okay with that. And then after the market closes, if anybody has any questions whatsoever, please just type them in the chat. Don't be shy, and I'll do my best to answer or clarify. If you want me to take a look at any particular stocks or symbols, I'm happy to do that. Or if you're having any issues with your own trading, if you'd like to share, please share, and maybe we can take a look and discuss it and maybe hopefully come up with some kind of solution. So that is the plan. So, hey, Gamer Squad. Hey, how you doing? Good to see you. Thank you for coming by and saying hello. John, good to see you, sir. Thank you for coming by as always. Frederick's here. Hey, buddy, what's going on? Steve Burns. Hey, Steve, how you doing? Steve says, hey, Greg, congratulations on your overnight SPY trade. Nice exit. Yes, that was a good trade for sure. And thank you for coming by, Steve. It's always great to see you. It's always an honor to have you in here. I'm always excited to have you in here, and I know everyone else is too. Steve says the weakest part of any trading system is the trader that uses it. Man, Steve's so good at just distilling down ideas and putting them in short little sentences. I need to get better at that, because I kind of go on and on and on, but I guess it's just my personality. But you're 100% right, Steve. The weakest part of any trading system is the trader that is using it. So true. So true. All right. Well, listen, let's run the U.S. legal disclaimer and get that out of the way, and I will be back in 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Okay. So let's go through my positions. I only have one stock position, and I have some put positions, mainly heavy in puts, not in stocks at the moment after Friday's action. But first on deck is the SPY trade. So as many of you know, I do buy the SPY each day at the end of the market. Every single day, I sell it first thing in the morning every single day, regardless of where it is. And you might ask yourself, geez, that doesn't seem like a very technical approach. And on the surface, you are right. But let me show you why I do that. This is based on a back test from Liz Ann Saunders at Bespoke Invest on Twitter. But in this backtest, there's two options. The first option is that you could buy the SPY at the open every day and sell it at the close every day. So you'd buy in the morning, sell in the afternoon. If you use this approach, since 1993, you would have actually lost 13.9% by doing that. But if you do the opposite, which is what I do, and buy the SPY at the close in the afternoon, sell it the next morning at the open every day, buy at the close, sell at the open, buy at the close, sell at the open, since 1993, you would have actually returned 634.2%. So buying in the morning, selling in the afternoon, negative 13.9% since 1993. Buying at the close, selling in the morning, since 1993 is 634.2%. And you can see the difference. The blue line here is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. So you can see there's a clear edge to using this system over time. And what does this mean? This means that all of the returns in the entire S&P since 1993 have come in the after hours. I mean, it's crazy, right? When you try to get your head around that all of the returns in the market have come in after hours. That's people bidding it up in the aftermarket, bidding up in the pre-market session, and selling it into the close. And this chart shows you exactly and proves that point. So, this chart is such a good example of finding an edge in some kind of trading approach or some type of trading system and quantifying it, that it does have an edge, and then just entering that position that has the edge over and over and over and over again, and letting that edge play out over time. And you can see this is definitely played out over time. There are drawdowns in the middle. That is for sure. That is just a normal part of trading. It's just a random distribution. But if you have an edge over the long term, that edge will play itself out. But it's important that you position size correctly, everybody. Because imagine if you would have started right here, right? And you would have used an improper position size. Well, that went down long term here over 2 years, right? So as with any trade, you want to position size correctly, let the edge play out, position size to the point to where you have to realize there are going to be ups and downs and ups and downs. So, position size so that you're aware of that, and that you can make it through the drawdowns to let the edge play out. So with that being said, I did buy the S&P here Friday at 284.89, and we sold it first thing this morning at 287.20. So it was a really nice overnight trade. I will be buying this again at the end of the day and selling it first thing tomorrow. I've been using this since February 26th, and it has been a really nice, profitable approach. But again, based upon that chart that I showed you, there are ups and there are downs. There are ups and they are downs. So, if you use this approach, take a long-term approach with this, just like any other trading methodology, right? Be in trading for the long term. Don't risk your capital, your whole account in a short time frame, because it's very likely that you'll blow up your account and then you'll never get the experience to be a good trader. And if you don't get the experience, you're never going to be a skillful trader, right? So literally the best advice I can give everybody is view trading as a long-term endeavor. Don't get too excited about any one trade. Learn the technicals, learn what gives you an edge, but position size conservatively so that you don't get too much emotion with the trade up or down, and you can be it for the long term, and you can learn the skills to be a successful trader. So I know I hit you guys over the head with that all the time, but it's my best advice. It is my best advice. Hey, Mount Doji, how you doing? So I will go over AGN. Mount Doji sent me AGN and wanted me to take a look at it, so I definitely will do that. All right, so I did get out of the SPY this morning, so currently right now I do not have any positions whatsoever, stock positions. Now, I do have, as you know, I do like to sell puts. It's just another profit center for my trading approach. I did sell a put on the VIX back here on the 21st of August down to 2350. And so when you sell a put, essentially that is a bullish position. You sell the put, you get the premium for selling the put, and as long as it stays above this particular line by September 20th, I'll be able to keep the full premium. If it does come down here and close below by expiration, I will be required to buy the shares at that price. But as you can see, I did buy it here. It's moved up nicely, which is good. That increases the profit on the trade. I bought it because, we made this high. It was really volatile. We moved up. We moved back down into the value zone. As you know, I like to buy my shares in the value zone. And I guess I should have just bought the VIX instead of selling the puts, right? Because it went racing up. But it's okay. I've got about 62 or 63% of the premium. If I get up to 80% of the premium, I'll just go ahead and lock it in, because at that point you're holding on to this thing for 3 more weeks just for 20% what you have left of your premium. So if we have another up day or two, that will put me over the top to just go ahead and take the profit on this. And then also, when I sell a put, I like to use a strike price that has some support underneath that strike price on 3 different time frames. And here on the monthly, we have support right underneath the 180R channel. You can see V2 happen here on the monthly, which is also good. On the weekly, when I wrote it, the strike price was underneath the -1 ATR channel. So that should provide some support as well. And then on the daily, we had the previous highs here, which when we broke through, these should act as support as well. So again, when I sell puts, I like to see some kind of support or some kind of level on different time frames, not just one. So anyway, this one's working out really well so far. All right, the Qs. So I did sell some puts on the Qs at 169 September 20th. These are all September 20th, 169 puts. And let's start with the monthly first. So, the 169 price on the monthly is smack dab right here in the middle of the value zone. It does have the 20-month moving average above it. So it does have some support. It should have some support here at the 5, at the 10, at the 20. So, I look at these as kind of protections above my my strike price. So 169 on the monthly looks pretty good here for those reasons. On the weekly, we have the ascending 100-day moving average above it to act as some support, and then we have the third ATR channel down here. Always watch when you get weekly bars, weekly prices up at the third or the -3rd ATR. Generally, it's a pretty good spot to take the other side. And I'm not talking about taking the other side here on the puts, but I'm talking about support. You can see here, we hit the third ATR channel, had a nice rally. Here, hit the third ATR channel, nice rally. Here, got right up to the third. That was about it, right? So when prices get down to up to the third or the -3rd ATR channel on the weekly, not all the time, but a lot of the times, that's about the meat of the move. So again, on the weekly, I have the 100 week moving average above me here and the -3rd ATR channel. So that should give me some support. And then on the daily, we're down here right around the 6 ATR channel on the daily, and also at the low of back here in June. So we'll see if it holds. We don't know if we don't know if it's going to hold, right? It is anticipation in a way, but I really would not mind buying the Qs down at this level. And if it gets down here and I'm required to buy the shares, then I guess I'll buy the shares depending on what the price action is, and then I'll manage the shares from there. But in the meantime, if it does not get down there, I'll get to keep the full amount of premium. And, you know, we've had a lot of volatility in the market lately, and when volatility increases, the premium you get is higher. So I generally do not write puts unless we have kind of a big down move or have a lot of volatility, because that increases the price of the premium. So anyway, this one's moving up. This one's good. Now, Philip Morris. This was unexpected. So I wrote this down to 72.50. So again, with a put, I write this, if it does not get down to 72.50 by September 20th, I'll be able to keep all the premium. And it was a pretty hefty premium. But you can see what happened today. It's down 4.19%. Not so good, right? So there's two ways I can approach this. One, just go ahead, take the loss. It's not too bad of a loss because it's a monthly put. Or I run out the clock and see whether or not it will hold until here. So if we go back, let's look at the monthly, and I'll tell you why I looked at the 72.50 price. So the 72.50 price does have the 100 month moving average above it. It also has the -1 ATR channel below it. So these should give it some support. Over here for months, this really was the low. That was the support. This is where buyers came in. So on the monthly, that's why I chose that. On the weekly, does have the -3rd ATR channel above it. And currently right now, you can see if we test these lows down here, we are going to have a double bottom with a bullish divergence. It's not there yet. It's something I just kind of have to look at and forecast. And then on the daily, we're down here in the very low RSIs and down near the 5th ATR channel. So we shall see. This one's going to be, this one I'm going to have to make a decision on. We did bounce off the -3rd ATR channel today, which is positive. Right at the same time, we basically tested the 30 RSI. So I'm actually considering possibly taking in a position in this as well. And then, but we'll see at the end of the day. But the other thing I wanted to point out was that when we hit the 3rd ATR channel and we hit the 30 RSI, it also, these two together are good, but we also caught support here back. There was quite a bit of support back here. So out of the puts, this is the only losing one at the moment. So I'm gonna have to watch this one. I'm gonna have to watch this one and see. But all in all, it's been a green day. I'm happy for that. And let's see, is that all the positions? That's all the positions. All right. All right. So listen, before we get to going through the watch list and taking a look at everything today and see if we have any potential setups, I want to do just a little bit on trader psychology here, you guys. I mean, you guys know that I like to do it every day, but I look on Twitter, I look for good sayings, trading philosophy sayings, and then I like to share them with you and go over them and try to put them in context. But here is a post from two of my favorite people besides Steve Burns, but two of my favorite people on Twitter. It's Thomas Payne at Trader T Payne on Twitter. He just puts out such good information, such good trading psychology quotes every day. And then Stephen Goldstein at Alpha Mind 101. And actually, Stephen Goldstein has such a great podcast, the Alpha Mind podcast. You might want to look that up. He interviews some really great traders, has some good advice. But so Thomas up here shared Stephen's post here, but they're two in one. Two really good posts in one. But I would really recommend, guys, that you follow Thomas Payne at Trader T Paint and Stephen Goldstein at Alpha Mind 101. Let's see. Maybe we should start with Stephen's post first. Many traders focus on what went wrong, but when things go well, it can be useful to dig into a journal. What went right? What did you do well? What part of who you are led to good outcomes? How you got into the right mindset? Then, when you face tough times, refer back to these. Learn not just from your trading failures, but also your trading successes. Your successes hold the clues to your genius. And then Thomas responds, we are often taught to learn from our mistakes. We become self-critical and some become so self-critical that they overlook the good things about themselves. Don't let constructive self-criticism turn into negative self-talk. Remember to reinforce the things you do right. And, if you've been listening to this channel for a while, you hear me say this a lot. Look on the bright side. Of course, you're going to have mistakes. Of course, you're going to have losing trades. It happens. There is, there's nothing you can do about it. But instead of focusing on those losses and focusing on the mistakes, give yourself a pat on the back and start reinforcing the things that you do right, because you're going to do things wrong. You're going to do things right, but don't focus on the things that you do wrong. If you get out of a stock when you're supposed to, congratulate yourself. When I have a winning trade, somebody, hey, good job on the winning trade. And that's nice. But in reality, what you should be saying is when I have a loss and I get out, that's really the time to be congratulated, everybody, because that's the hard thing to do, right? We didn't have anything to do with whether the stock went up or down. But in the big picture, the most important part is that when you hit your stops, you get out of the stops, right? Or if you have a 10-yard loss on a trade and you're patient, you wait till you're supposed to do, and you only end up with a 6-yard loss, well, that's positive too, right? So focus on the positive things you do. Don't get into this downward spiral of only focusing on the negative things, right? And so I've mentioned this many times in the past, but after I get done trading, after we do the live stream, I go hiking and I think about the trades that I made. And of course, your mind kind of wants to focus on your losing trades, but I always take time to go, okay, well, I did this right and I did that right. It turned into a loss, but was my setup correct? Were things correct going into it? Yes. And that's really all that you can ask for. So anyway, just to sum up, everybody, focus on the things you do right, even if they're losing trades or losing moves. Don't focus on the negative things. Don't put yourself into the negative self spiral. Congratulate yourself on the things that you were supposed to do as well. So thank you, Thomas Payne at Trader T Payne, and thank you, Stephen Goldstein at Alpha Mind 101. All right. Mount Doji says weekly at the plus and negative third ATR is very interesting to point out. Got to check that out on my charts. Yeah, Mount Doji, I learned that from Kerry Lavorne, and he really looks for, when he's looking for extremes in the market, he looks for the third ATR channel or the negative third ATR channel. We look a lot on the daily, for entries back up into the third ATR channel or below the plus third ATR channel, possibly on a short. But the longer time frames that you go out, the more robust they are. The longer you go, the more the meaning of indicators, essentially. So, if you're looking at buying something and it's at the third ATR channel, then it's the meat of the move is probably gone. Not all the time, right? Disclaimer, not all the time, but a lot of the time, more than not. Hey, Chris F is here. How you doing, Chris? Good to see you. Chris says you can roll it down and out. Yeah, he's talking about rolling down and out my put for more premium. Yep, unless there is an announcement, earnings or whatnot. Yeah. By the way, I never write puts if there's earnings within the time frame of the contract. Mount Doji says after a dump like Friday, I feel like there may be a good amount of stocks at the third ATR channel. Well, let's look at this. Let's look at the S&P. Right? This week I was looking at other options I could write, and you can see I haven't written this one on the S&P, but this is the weekly. 265 would be my level if I were to sell a put on the SPY. And why? Because it's right under the third ATR channel. I mean, look right here on the SPY. That was about it. That was about it. Didn't quite get up there. So, all right. All right, well, let's head down through here and see if anything looks interesting for today. So now you're going to see this reoccurring pattern here a lot, and you can see the bar that we had Friday. Pretty nasty, right? This concerns me, honestly. This concerns me a lot, because whenever you get a bar that's larger than one ATR, here's an ATR from here to here, here's an ATR from here to here, here's an ATR from here to here. This bar is certainly larger than one ATR. It's two ATRs. And the way I look at a bar that's larger than one ATR is there had to be an extraordinary amount of selling to happen for you to have a huge down bar like this, and you have to have an extra amount of buying for you to have a bar that's larger than one ATR to the upside. And when we take V1s, V2s, I don't like to take V1s, V2s when the day one bar is larger than one ATR, because we just had a huge dump of stock, right? So what concerns me about this right now is, when we have a large ATR bar, a lot of times the price will rally right back to about halfway of that. That's the fib number. That's the 50%. That's the 50% fib number. And look exactly where we're at, right? This doesn't surprise me that we're halfway here, but honestly, it would surprise me if we could go back up. Now, if we have some kind of trade news, then we will. But from a technical standpoint, this is about all. This is about all I would expect right in front of this big move. So I'm certainly not going to take anything on Apple because of this big bar here. It doesn't mean it can't go up, but just if this setup 100 times, more than 50% of them I think would fail and come back down, but we'll see. Mount Doji says CGC hit the third ATR channel, I think. All right, I'll look at that after. Hey Murat, what's going on, buddy? Thanks for coming by. All right, so nothing on Apple at the moment. Adobe, same pattern, guys. Big bar, larger than one ATR channel, and look where we're stuck. We're stuck right at the halfway point. So nothing on Adobe. Silver. Well, interestingly enough, and by the way, when we're talking about third ATR channels, if you can get something to close above the third ATR channel, that's very strong. This looks a little suspect to me in the fact that we went above 70, and now it looks like we're closing below 70. Now it looks like we might be closing below the negative, or the third ATR channel too. Let's look at it on the weekly. Well, it did find some resistance here, but then it closed above. See, there's a big difference in something going up to the third ATR channel and closing below compared to going above the third ATR channel on the weekly and keeping above. And then on the weekly, we also tagged the 200-day moving average, so that's a little concerning as well. So I don't, I'm not going to buy anything here. If I was a shorty kind of guy, I might consider shorting here, but I'm not going to do that at this point. I'd like to see the 5 cross under the 20, back over. That would be one entry point here, or getting back into the value zone, moving sideways, and then having a V1, V2 to the upside. We had that exact same trade back here on the 10th of July when the 5 crossed under the 20, 5 crossed over the 20, and that was a nice, very simple trade. We scaled out all the way to there, but we haven't had anything on silver yet. All right, advanced micro, not looking very good. You know, again, we had the big bar larger than 1 ATR. You can see intraday here, looks like we hit right about the 50 and we lost it. This was a losing trade. I actually bought advanced micro devices here when we had this nice V2, day 1, day 2, day 3, day 2 washes out day 1, day 3, closed above day 1. It was a higher low. We moved back above all the moving averages, but then we just got whomped. As a matter of fact, I hit my 5% intraday emergency stop on this trade. So yeah, that one hurt, but that's just part of it. But getting back to congratulating yourself, I did get out when I was supposed to. That's the most important part, right? So let's always congratulate ourselves when we get out when we're supposed to. Okay, Amazon. So Friday we closed below. Today we're closing back above the 200-day moving average, at least at the moment we are. Now, that is a legitimate back-tested approach. This is from etfreplay.com. This is the back test, the 200-day, closing below, closing back above. If we run the back test, you can see there is a definite edge to trading this approach. 1,223.5% buy and hold. You had more, 2211.6. The drawdown on the system was 61.6 and the drawdown on the buy and hold was 93.3. So this does backtest well. It only wins about 17.7% of the time, but when it wins about an average of 37.7. The times it loses, it only loses 0.3. So it's possible to take an entry here today on Amazon. It would give us a good risk to reward. That's the main thing here. And we do have a double bottom with the divergence here. We have the lows, see how deep these bars are, then we rally. Now we've come lower, but you see how shallow the bars are. So this is currently right now a double bottom with a bullish divergence. But when you have that, you also need a trigger, and the trigger would be a close back above the 200. So this is, I am considering buying Amazon here at the end of the day, using a close below the 200 day as my stop. Boeing. Didn't like the prices up there the last couple days. Rejected the third ATR channel. So nothing on Boeing. Alibaba, again, big down bar, halfway. That's not positive. Caterpillar. Looks like we have a double bottom here. We never had any green on the MACD, so this is not a legitimate double bottom with the bullish divergence. DDM, well, this is again legitimate. If we go back to DDM on ETF replay, this is the double leveraged Dow. If I do buy this today, it will only be a half position because this is double leveraged. But this has a good return. Using this approach has a better return than buy and hold, and the drawdown is much less than buy and hold. So with that being said, I will take another stab at this today. I like that we did buy it here with the same approach, under, over, went up. We did phase out a bit, then we got caught in this on the way down. We had to get out. What I do like about this today is, one, we're over the 200-day moving average. But we are also, it did test the 200 again, and we are also closing, looks like at the moment at least, we're closing above the -1 ATR channel and the 250-day moving average. So that is a potential as well. Disney, nothing really on Disney today. Etsy looks like it's going to make a lower low here. I would be interested in Etsy if we could form a V2. Here's day 1, day 2. Day 2 washes out day 1 and form a V2 back up into the channel higher low. So not happening right now, but going forward that might be interesting. Ford Motor Company sticking below the 200. The longer it sticks below the 200, the worse it is. Facebook, same pattern, big bar down, failed at the 50% mark. a valid V1, but we have earnings coming in a couple days, so I'm going to let that one go. Gold. Tried to go up earlier, reversed back down. It's holding support at this previous high. This was a resistance. We broke through. It should act as support. It's exactly what it's doing, but nothing I can do with gold there. Google, same thing. Big bar down, got to about halfway. Nothing on Google. Goldman Sachs. Well, we did bounce off the 200-day moving average. We're at a 43 RSI. I don't think I would take this trade here. I mean, it certainly might go up, but the reason I'm not going to take it is we're kind of stuck in the halfway of this bar here, and there probably is going to be some resistance at the 50 RSI, and right now we're at a 43, so that only gives us about 7 RSI points to the upside. So right here, right now on this one, I don't like the risk to reward. IBB, nothing there. What we need to wait for on IBB is a 5 crossing back over the 30, so nothing on IBB at the moment. Intel, again, can't overcome this big bar. The Russell. Nothing there. J&J. We do have a double bottom with the divergence here. See how deep these bars are on this low. Then we rallied. Now we've come back down this low. See how we barely have any downward movement on the MACD. So this is a double bottom with the bullish divergence. The only thing is this bottom happened a long time ago. Happened, it seems like almost over 30 days ago. And the longer you go in the past for you to come up with your double bottom bullish divergence, the weaker the signal is. So I'm not going to do anything with Johnson & Johnson. Coca-Cola. This is a little stronger because we have the downward bar, and it looks like we might hold above, close above the 50%. That makes that positive, but nothing on Coke for me today. Lockheed Martin, again, rally to about halfway. MasterCard, rally to halfway. Merck, rally to halfway of yesterday or Friday's bar. Broken record, more than one ATR down, rallied to halfway and looks like it's going to fail. So there's nothing on Microsoft. Nothing on Netflix. You know, Nike is closing above, looks like it's going to close above the 200-day here, but this 200-day moving average has lost all respect. The market has lost all respect for this 200-day. We're under, we're over, we're under, we're over. So nothing for me on Nike. The best ones are when it just comes down and immediately bounces off that thing, right? But here it's just above, below, above, below, above. You know, I'm tempted to take this trade because it tagged the third ATR channel, it tagged the 30 RSI, it happened right over here when, in addition, this was the previous support, it bounced right off of that support. But I am not going to buy it because I have the Philip Morris puts, and that would give me too much of a position in Philip Morris. So, you know, based upon this bouncing off of here, I am going to keep my puts, see if we can run out the clock a little bit. If we have a rally up to about halfway of this bar and then it fails, I might just go ahead and get out of my puts then, but just, you know, turning a 10-yard loss into a 6-yard loss. Nothing wrong with that. Every trade doesn't have to be a winner. Okay, so no, no position on Philip Morris other than the puts. Same thing on PayPal, halfway, big bar down on Friday, rejected the halfway mark. The Qs, nothing on the Qs. I would be interested in buying the Qs if we could get down here. Look at this combination of the third ATR channel and the 200-day and probably pretty low RSI. This would be a pretty sweet spot to buy, but I was even more conservative when I sold the puts down to here. So Snapchat is working on a I hope my I think my charts are crashing at the moment. Shoot. All right. Reboot the charts. Darn it. Sorry about that, everybody. Loading, loading, loading. Gamer Squad, do you use EMA or SMA? It depends. I on the 250, on the 200, on the 50, I use SMAs, but on the 5, the 10, and the 20, I use EMAs. All right. So it looks like this is coming back up. Come on now, hurry up, hurry up. Whew. All right, where were we? Snap. Possibly a V2 there. The bar, though, the day one bar is larger than 1 ATR, so I think I'm going to pass. The SPY, of course, we're going to buy that at the end of the day again. Square, rejected Friday's halfway bar. SSO, same thing, rejected halfway. Bonds, down a little bit today. Tesla, a little bit of anemic bounce. Twitter, just up a little bit today. UNG, big strong day today there, but it's over the 1 ATR channel, so it's too high. United Healthcare had that move sideways and then finally busted out of there. USO gapped up but couldn't hold it. The dollar had a huge down move on Friday. Nothing there. The VIX we have with the put down to here. Verizon. Again, Verizon has just lost respect for the 200. Above, below, above, below, above, below, above. Walmart came into the value zone, did hold the gap up day there, but I can't buy it, it's too high. Energy Select, I would be interested in buying Energy Select if we could go under the 30, back over, under the third ATR channel, back over, but nothing there yet. Financials, we did buy it here, we scaled out a little here, and then that dumped on us on Friday, so nothing there. Real estate, nothing. Utilities, no. Healthcare, no. Pharmaceuticals, no. All right, so it looks like the possibilities for today are Amazon and DDM. If Amazon is going to close above what is that, 1758.35, and DDM above, because we had to close below the 200 and then back over the 200. I actually do like DDM better than I like Amazon, just because this did test the 200 and close back in over the -1 ATR channel. Amazon, I'm a little concerned because of this bar here and that we're under the -1 ATR channel. I mean, it's not a deal killer, but let's just see where that ends up.
Order cancelled.
Okay. All right, so it's down to Amazon with close under, close back over the 200. You know, the only thing that's keeping me in this potential trade is, one, it backtests well, and two, we have this double bottom with a bullish divergence. So with that being said, it does give us a good risk to reward ratio if it closes above. DDM closing above the 200. Again, this is double leverage, so I'm going to take a half position. So everybody remember that now, right? It's a double leverage. So if you're normally take a $2,000 position, I would take a $1,000 position because its move is double. So it's the same as taking a $2,000 position. All right. So with that being said, all right. Murat says, when you do backtest, are you starting from the IPO day of Amazon? The drawdown figure was based on daily, I think, and 90% of the drawdown could only happen maybe the first few years of Amazon. What do you think? Yeah, when you do the back test, Murat, it bases it off of 2000, and what it does is it compares when you have the signal, it enters there on the signal part, and then it also, compared to the buy and hold part, it bases it from the same place that you did the crossover system. So it doesn't on this particular test, it doesn't do it from the IPO. It does it from where the back test started for the crossover. And you're right, that 90% drawdown, that happened back in 2008. Or 2002, excuse me. That happened here. This is where that drawdown came from. All right, give me 1 second. Puppy's acting up. I'll be right back. Okay, sorry about that. Man, I swear she waits right till the end of the close, right at the close, to act up. Mount Doji says, I was thinking the same about 200-day for Nike. What would ever validate that signal again moving ahead? That's a good question. To me, moving up away from it, getting out of this chop sidewards movement here, moving away, coming back down and giving it some space. You know, right here it was just above, below, above, below, above, below. You know, this moved up for a while, then came back down and put some space between it. That's when I would look at it being valid again. All right, so how's our Amazon doing? Looks like it's doing fine. DDM looks like it's doing fine. I have 4 minutes. All right, so
order partially filled.
All right, so I'm going to go
Order
ahead.
filled. Order partially filled.
These are not
Order
marked on
filled.
close orders. So let's queue up Amazon. So I'm going to do, what do we have? We have 3 minutes. All right, so I'm going to do DDM, half a position, because it's double leverage.
Order partially filled. Order filled.
And then Amazon, regular position.
Order filled.
And I trade these in several accounts, so I have to do it in, let's see.
Order partially filled. Order filled. Order filled.
Okay, so let's see. Amazon, I bought it 1765.77. DDM, I bought it 45.75. And then at the end of the day, let's see. So we'll have, so Amazon, DDM, all right, Amazon we got filled at 1765.77. And DDM we got filled at 45.75. And then our S&P we'll get at the end of the day. So not too big of positions really at the moment, right? We have Amazon close below the 200. We don't know whether this is going to be a good trade or not, but we do know if we're wrong, we should be wrong small, and if we're right, we have a lot of upside potential. DDM, I should mention the DDM will be a discretion or a mechanical trade. So as long as it's above here, I will keep it. Amazon will be a discretion.
Order filled.
Okay. That was that. 288 even on SPY. So there we go. So we got Amazon at 1765.77. That's up a little bit. DDM, we bought at 45.75. That had a nice rally right at the end, so that's good. And then SPY we got at 288. And that's it. So we're going to see, we're going to run out the clock on VIX, run out the clock on the Qs, down to 169, and Philip Morris did not buy that, but our put is down here to 72.50. So that still gives us about 6.5% protection at the bottom there. All right. So Mount Doji says that makes sense. Yeah, at some point it's not respecting it, but then it has to kind of move off, do its own thing, change the dynamics around, and then if it comes back down and test it, then it has respect for it. So Gamer Squad, I hope that made sense. So let's see if I can find it better. So on the 200, I use an SMA. The 250, I use an SMA. The 100, I use an SMA, and the 50, I use an SMA. But the 5-day, the 10-day, and the 20-day, I use all EMAs. And, in the description of this video, Gamer Squad, I have 4 tutorials or 4 lessons on my YouTube channel. They're totally free. But one of them are my indicators on my charts, and I go through each one, show all the specifics of all the values that I use, and what's an EMA, what's a SMA. So that lesson's very detailed. So if you're ever not sure, you can just refer to that, and that link's in the description here. Oh, CGC. So CGC, yeah, but okay, so here's the thing, Mount Doji. I would have been more interested in it here when it went below the 3rd weekly ATR channel and then back over. But now that it's under the negative 3rd ATR channel on the weekly, I'd probably stay away from it. Remember, if it tests it and then goes back up, that's bullish. If it closes below, that means it is very, 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 very weak. AGN. All right, so let's look at allergen. For Mount Doji. So of course, I'm not sure what happened here. It looks like some news. We went way, way up. That was the bulk of the move. Now we're moving sideways. We're consolidating. We're consolidating. We're consolidating. We're back into the value zone, which is decent. Here you had a V2 possibly back in the value zone. It wasn't a great V2, but this has been moving sideways so much. I do kind of expect something to happen with this. I like that it's in the value zone. Today's bar looks like it did close above yesterday's halfway, so that is positive. I don't think I'd buy it right here. Let's look at the weekly. So, when we talk about larger than 1 ATR bars, this is obviously like 5 ATR bars. There should be some support. I would be interested, if it were me, Mount Doji, I would be looking for some kind of buy on AGN right here at about halfway of this big bar. And if we look at that on the daily, where does that put us? Maybe somewhere down here. So, taking a look at this, somewhere down here, a move down under the 200 and back over, that would be a sweet spot, because the under the 200 back over the 200 would correspond at about halfway of this big 50% fib number on this big bar. So I hope that helps. But I don't think me personally, I would be doing anything with it right here at the moment. Frederick says, got hit by an emergency stop at the open. It's part of trading. Ah, did you really? Yeah, because, the futures were down so huge last night. I think the futures opened down like 324 or 350, somewhere in that range. And I guess the futures were down because you're in Europe. It's too bad, Frederick. But, you know, they happen. They happened to me Friday, right? If you have a conservative position size, then it's not going to hurt that much, right? So again, you know, we're just one tweet away from 400 or 500 points one way or the other. So please, regardless of what you're buying, buy a conservative position size, 5% of your capital, 10% of your capital, something like that. And then in addition to just, you know, not buying more than 5 or 10% of one position, don't have too many positions either, right? I have a maximum of 6 positions. So the maximum of my capital I'll ever put to work is 60%, right? And does that affect returns? Well, sure it does, but it also guards against big drawdowns. And I'm always looking at the risk side more than I am the reward side. John says, thoughts on HOG and CTAS? Okay, let's take a look. So here's Harley Davidson. On the plus side, we are staying above the negative third ATR channel on the daily. That is positive. Let's look at the weekly. Weekly still has a ways back down to the third ATR channel on the week. You can see it respected it really well here. It's a 36.48 RSI. You know, I wouldn't do anything with Harley Davidson right here at all. You know, the first trigger for me is if we went under the 30, back over the 30, went under the negative third ATR channel, back over the third ATR channel. If it closes under the third ATR channel, I wouldn't, even if it went under the 30 and back over, but it was still under the third ATR channel, I wouldn't buy it. Really like to see this go under the third ATR channel and under the 30 RSI and then back over, because, you know, we still have, we could still go down a couple bucks down here before the third ATR channel on the weekly kicks in. So I would be a little conservative on Harley Davidson, and then I think it has a couple more bucks below it. CTAS. So, all right. So we did make a higher high here, and then we came back into the value zone. That's good, right? That's good. The only issue here is this big bar, John. This is larger than 1 ATR. And again, if it's larger than 1 ATR, that means a lot of supply came in. And if a lot of supply came in, it's going to be hard to overcome and go back up, because the people that are still stuck in here are going to be looking to sell if it gets back to there. So with this particular stock, I do like that it's back into the value zone. I do like that it rejected the negative 1 ATR channel. I'd like to see this move sideways for a couple more days and then have a valid V1 or V2 back up. That would be how I view this. You know, on the weekly, it's very, very strong. But we did lose the third ATR channel, right? This was very strong, being above the third ATR channel on the weekly, but now we've come back down. So that's not such a great price action. And then when you go to the daily, we have these two big down bars today. It looks like this did close above halfway of this bar, so that's somewhat positive, but I just think there's going to be a lot of supply up here still that people are going to be looking to sell into. Hog hit a 52-week low Friday. Yeah, I think it has some more downside. I mean, who knows? It could go right back up, but you know, you have to have some kind of plan, right? And my plan on Hog would be under 30 back over, under the third ATR channel back over. Frederick says, "Yep, I follow your rules on money management, so my account is still alive." Oh, I'm glad to hear that. Guys, you got to stay alive in this business. to get experience. And the only way you're going to do that is position size correctly. So if you take anything away from this live stream, play the long game, position size correctly. So even if you are wrong and you have a string of a ton of losses, it's really not going to impact your account. The traders that get into trouble or take too large positions, they double, they triple up, they average down, and then they run into some huge kind of news, and before you know it, their account's cut in half. They're like, trading's the stupidest thing in the world. I should never have done this. Well, what you shouldn't have done is double up and triple up on your position and put yourself at that kind of risk. You should take the long view. So take the long view, position size correctly. Murat says, my broker passed the information about the trade news 2 minutes before the market opened. I was sure that everyone who didn't get in will sell in panic. The stocks first went down big and turned green. Yeah. Yeah, it's a scary market right now, Murat. I mean, it is a scary market. We're just hundreds and hundreds and hundreds of points away, either up or down, based on, one particular tweet or one particular headline. So, let's be careful. Let's be careful out there for sure. Mount Doji, do you have any thoughts or play on stocks that just hit their 52-week low? There were so many this past Friday. Well, the way I trade, not really, Mount Doji, but I mean, it is another piece of information. I mean, it's never good when something hits a 52-week low, right? It never is. But, if I get a signal, if I get something under 30, back over 30, under the 30 ATR channel, back over the 30 ATR channel, even stocks that are at their lows and going down, they are going to have counter rallies that you can take advantage of, but you have to wait for some kind of signal for that to really happen. So to answer your question, no, I don't really go, oh, it was at a 52-week low, so I'm not going to take that trade. But it's a good thing to keep in the back of your head, just as far as general market conditions, if things are hitting the 52-week low. But no, if I get a valid signal, I'm going to take it. Murat says, I think CTAS is strong. Yeah, I mean, it is strong. I mean, look at the monthly, hugely strong. It's above the third ATR channel on the month. That's hugely strong. Weekly. But, when I use the triple screen, you look for something that is in an uptrend on the highest time frame, which is the monthly. Ideally, I'd like to see the weekly come back into here, because every uptrend on the monthly is going to have little pullbacks, right? And I just think, again, whenever the prices get close to the third ATR channel on the week, you're pushing it a little bit. You know what I mean? So, even if we had a nice V1, V2 here on Cintas right here, would I buy it? I'm not sure I would, because on the weekly, we're so high on the weekly. So I probably would pass on the trade, even if we had a really good V1, V2 on the daily, because we're so high on the weekly. And, that's what I was taught by Kerry Lavorne. Even if Kerry Lavorne had a picture perfect V1, V2 in the value zone, if it's above the second ATR channel on the weekly, he won't take it, because he feels like the rubber bands pull too strong. CTAS seems to have very strong support line, and the on-balance volume is building up. Plus, the Bollinger Band came into the ATR channel. There is a squeeze right now. The only missing thing is momentum. Yeah, I don't disagree. I mean, we are moving sideways. That's the squeeze, right? But this bar yesterday concerned me. Although on the positive side, we did have even more volume to the upside than we did Friday to the downside. So you might be entirely correct, Murat. But for me, just, the way I trade, I have to kind of stay away from this until at least it settles down and moves sideways. Ameritrade. I haven't looked at that stock for a long time. Oh boy. Lost its 200 week moving average. Did catch a little support here close to the 200 in the negative third ATR channel. Same with this one. Mount Doji. If we had a big washout bar under the 30 third ATR channel on the daily, under the 30 and back over, that might be a place to enter. But just because that happens doesn't mean that's the bottom when we're going back up here. That just means we probably might have some kind of relief rally, maybe back up to the 50 RSI. When you buy those deep dips, keep in mind deep dips you're not looking for a bottom. You're just looking for a reaction rally to take advantage of, because very likely it will come back up and then come back down to test. So keep that in mind. If you take a crossover, you take something, a nice V1, V2 inside the channel in an upward, an upward trend, and then yes, those might trend and you can be a little more patient with those to the upside. But when I'm buying these deep dips, I'm quick to get out. I mean, if it went down, like if it did this today, for example, now I messed it up. Oh, I really messed it up. Now I have to restart the whole thing because I messed up the thing. Oh well. Probably a good time to call it anyway. So, well, let's see. Let's see if I can get this back up. Hopefully. I moved one of the indicators around and it screwed up the whole chart. Frederick says, I bought a stock who never closed below 10 EMA since 1 month. Is it a good back test? Well, I'd have to know what the stock is, and we'd have to run the back test here to see. You can't just look at something over 1 month and think, okay, that proves that it's good or bad. Do you know what I'm saying? Now, Doji says, thanks for all your help as always. I have one more phone call to take before the end of the day. All right, get on that phone call. Let's see if these charts will come back up. All right. Does anyone have any other questions? If you do, please let me know. Ah, shoot. I messed up the charts. I'm going to have to go in here, fix these. So, darn it. Yeah, I really screwed it up. I'm going to have to go in there and pinpoint what I did. All right. Well, listen, Mount Doji, thank you for coming, my friend. I appreciate it. Frederick, good seeing you as always. I appreciate you being here. Murat, good seeing you. Thanks for coming. You always have such great questions. John, good seeing you. I hope that helped on HOG and CTAS. Let's see. Gamer, good to see you again. Thanks for coming by. And you might want to check out those lessons I have on YouTube about all the indicators that I use. Chris F., thank you for input on the options about the rolling it down and rolling it out. You are correct. Steve Burns, thank you, my friend, for coming. Interested in going over to your channel, see what you bought today. And I think that is it for today. So listen, have a good rest of your day. Go out and do something nice for somebody today, right? Never hurts. Make you feel good. Make them feel good. And I appreciate you guys coming by today, and we'll see what happens tomorrow. Will be interesting, right? So have a good rest of your day. Hope to see you guys tomorrow. Take care. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.